All right. Good morning, everyone. It is 11:14 on the morning of October 19th, 2022, and this is my strategy session for the day. It's quite a bit later than usual, about 3 hours later than when I start my usual strategy session, but seem to have gotten sick. I have a sore throat and a stuffy head, and I woke up this morning and just was like, I got to go back to bed. So here I am. I woke up about half an hour ago. Yeah, and took a hot shower and just kind of letting these symptoms run their course. Looking forward to feeling better in a couple days. Well, anyway, I'm going to sit here in front of the screens for a couple hours. Maybe trade the afternoon session out, and I will see. So here's what we're looking at right now. These are the cues, and I've been trading mainly options on the cues for, gosh, I think the last like 4 months. I've just been concentrating on the cues. I mean, they've been giving so much opportunity intraday as well as for swing trades that it's just, there are definitely other places I could go, but it's just easier to concentrate on one thing right now. So, as of right now, let's see. Let's look at this last little October 13th, 14th, 17th, and then 18th move. I'll make a measure from the bottom here to the top. That was a 9% move in 4 days. So if there's anybody that started shorting, on the 13th, they were certainly disappointed by it by yesterday. Who knows? Anyway, I really think that this is just kind of the setup for the next leg down. I don't know though when it'll stop. This zigzag pattern right here. Yeah, that looks to me like it's just setting up for the next leg down. This neckline right here, I don't foresee the cues getting away from this neckline for too terribly long. Like certainly it did back here, right here. This rally right here ripped off a lot of faces. And if you're ever wondering where that rip your face off rally came from, read the book by, oh gosh, what is his name? I'm gonna have to look this up. I've read 3 of his books now. I can't remember. Was it Moneyball author Michael Lewis? That's it. And Michael Lewis wrote a book. Books, yeah. What did he write? The one that I'm looking for is Liar's Poker. The image isn't up there. I wonder why it's not up there. Michael Lewis book, Liar's Poker. So here it is right here. Liar's Poker, great book. That's the first book that I read from Michael Lewis. But anyway, and I've forgotten where Michael Lewis worked on Wall Street for a little while after he graduated. I think it was Yale or it was an Ivy League. And he graduated with, I don't know, a statistics degree or a math degree or something like that. And got a job on Wall Street. And as a part of the orientation of working with this Wall Street bank as a trader, he was put on one of the desks. I can't remember which one it was. But he was put on one of the trading desks. And during orientation, there was a guy that would come in. They had a various number of speakers for about a week who would come in and talk about how to survive as a trader, essentially. And one of the traders would come in, one of the people doing orientation would come in and talk about, if you're losing in a trade, this or that, whatever, and if you don't, you'll get your face ripped off. Well, the bears, I don't know, man has face ripped off. And that is alluding to Russian man with face ripped off by a bear. Ripped off by a bear. And so basically it has to do with this guy right here. He got his face ripped off by a bear. It's terrible. And this isn't the first account of it. There are a lot of accounts of it. Anyway, so yeah, the face ripping rallies. This was a face ripping rally, and that's where that whole thing comes from. It only happens in bear markets. And so here we are. I don't know how much higher this next run will go. I don't think that it's going to go very far. I think it's going to stick to this neckline essentially for a considerable amount of time. We're going through earnings season right now, and apparently earnings season isn't turning out to be too bad. I don't pay much attention to it really. I think it's just a distraction. A small sugar high, sugar rush happens once a quarter. To make the markets move so that people can profit. After that, it's all the macro data that really counts, and what the Fed is doing. So that's it. Don't fight the Fed. So the Fed is tightening. The equity markets are in, liquidity is drying up, and equity markets, they thrive on liquidity. And here we are, liquidity is drying up and the equity markets are going down. So today in the afternoon session, if I'm looking for an opportunity, it's going to be an opportunity to the downside. Upside opportunities most certainly exist and occur. However, trading in the direction of the trend is a lot more profitable, consistently profitable, than trading against, being contrarian to the trend. So that's the game plan for today. Right now, let's take a look at, I'll go to my risk ranges here. So the VIX is getting close to the bottom of its risk range. The bottom end of the risk range on the VIX right now is just shy of 30. The S&P bounced off the top end of its risk range here yesterday and got rejected. And then the same thing with the Qs. The Qs bounced off the top of their risk range yesterday. So we could spend a few days in this region, kind of like we did over here. Is that between the 23rd of September to the 3rd of October. We could spend a few days bobbling around in this price range right here, but it's just a matter of time until we start dropping down again. Also, let me pull up. I meant to do this yesterday. I put a Fibonacci on the Qs. Let's look at this real quick. Let me get, I'll erase this green line right here, this green circle, and then get rid of these trend lines. Put up this Fibonacci. So here we had a fairly, this is the, right here, this is the 68.3 or 68.2 Fibonacci. Let me go back to a weekly chart here. So, yeah, these are the Qs all the way from this low back here in 02 to the high in 21, late 2021. And here's the 38.2 retracement, 38.2 Fibonacci retracement. And we definitely got a strong movement off that level right there. And on the weekly, you can see it closed right at the 38.2. So the this 75% level, that's not a Fibonacci level. I just changed it from the Fibonacci, and I've forgotten what the Fibonacci is. I think it's like 77 something or other, 76 something. I changed it to 75 because 75 seems to work better than the sort of strange 73 number. Anyway, a move up to this Fibonacci wouldn't be surprising. And I'm keeping this trend line, this neckline in place, actually, because it's just sort of coincidental. The more coincidences you have at a price, the more viewers you'll have, more traders, investors you'll have at that price. It's just coincidence. But the more coincidences you can stack at a particular price and time, the more successful you'll be. So let me put that trend line back in place. Let me put that other trend line back in place. So, yeah, so this top trend line right here, if it breaks that top trend line, then it's probably going to go to this roughly 75% retracement level right here, and then start searching for the low again. I don't think it's going to go that high. Actually, I think that it might break through this top trend line right here, this top resistance and support line. Right now it's going to act as resistance. It might break through that, but it doesn't go all the way back to 75. It'll come back down. It might do a little head fake above this thing, to kind of shake off bears, rip the faces off of them, just for it to come back down again. So intraday, looking for bearish opportunities. Long term, I'm waiting for the next sort of leg up right here, leg up to this level somewhere in here, and then the next sort of down move after that. All right, everybody. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment. Stay healthy. I'll see you at tomorrow morning's strategy session. I am out.